Now, for the past 6 years, since 2019, we've had a set of rules in the UK for the banks called ringfencing, which means that the big banks have to keep the money that they take from depositors within a ring fence where they are only able to do certain activities with capital to support that. And the kind of more risky or speculative or investment banking operations, which they also do, has to be kind of accounted for separately outside the ring fence. This is one of the reforms introduced by you, George, following the Vickers Commission investigation and how we sort out the banking industry after the financial crisis. And the reason we're talking about it is that there have been some changes underway. Last year, the government said in order to boost competitiveness, they were going to raise the level of the size of the bank before you have to have a ring fencing operation from, I think, 25 to 35 billion pounds. The government said that was to enhance competitiveness. Bank of England reported in the FT this week that they are looking at ways to loosen the ring fencing rules for UK banks. Bob Diamond, the former head of Barclays, did a piece in the FT last week saying the post-financial crisis decision to separate retail banking from other operations weakens competition and increases risk. Ring fencing is bad for UK banks and customers. So there is a debate underway. Actually, all of the big banks wrote a letter to Rachel Reeves asking her to change this regime, other than the chief executive of Barclays, who said, no, we're quite happy to stick with it, which is quite interesting. And as I said, a policy you first introduced, and this is how you introduced this policy at the Mansion House in 2011.
And the Independent Commission on Banking has put forward two particularly important proposals. Bail in instead of bail out, so that private investors, not taxpayers, bear the losses if things go wrong. And a ring fence around better capitalised high street banks to make them safer and to protect their vital services to the economy if things go wrong. Today, I have told the Commission that the government endorses both these proposals in principle.
Yeah, so maybe I should kind of give some of the context to this policy and then we'll look at its future. So when I became the Chancellor in 2010, it was in the aftermath of the big bank bailouts of RBS and HBOS and, obviously the financial crash. And there was a real debate in British politics across the political spectrum. I don't think it was a particularly left-wing or right-wing thing that said, we need to run our banks differently. And there was a famous American law back in the 1930s called Glass-Steagall, which separated essentially retail banks, i.e. the banks where you go and get your mortgage or have your deposits with or your small business loan, and investment banks and, the big kind of market traders and bond traders and all that kind of thing and hedge funds. And there were a lot of people calling for Glass-Steagall to be reintroduced, both here and in America. Right? In America, they did introduce actually a version of it called Dodd-Frank, not nearly as aggressive as the original Glass-Steagall. And there was a big debate here in Britain. And among the kind of leading advocates at the time were Vince Cable, and of course we were in coalition with the Liberal Democrats. We relied on their votes to be a government, and Mervyn King, the governor of the Bank of England. So you actually had kind of key people. And the opposition, the Labour opposition, by then led by Ed Miliband, your friend, was also making hay with this, saying, we've learnt our lesson. We might have been in government at the time, but now we should separate out retail investment banking. And
by the way, not the Shadow Chancellor.
No, maybe the Shadow...
Not the Shadow Chancellor. The Shadow Chancellor, i.e. me, has spent the whole Labour leadership election explaining why Glass-Steagall was the wrong thing to do, making the argument that Northern Rock, a small retail bank, Lehman Brothers, an investment bank without a big retail operation, had both got into terrible trouble, whereas JP Morgan, HSBC, integrated banks with retail and investment banking operations, had been very solid and stable throughout the financial crisis. And therefore, the idea that Glass-Steagall break up the banks, it was populist and probably popular, but actually I always thought it was bad policy, and which is why I was always a bit sceptical even about your ring fence.
Well, so in order to try and solve this big debate in a hung parliament, in the aftermath of the financial crash, where there's a lot of vengeance being sought, was to ask a very smart guy, John Vickers, to do a report. He was assisted by a guy called Bill Winters, who's now, by the way, the chief executive of Standard Chartered Bank and has been a very senior executive at JP Morgan, to come up with a report on the future. And they said, no, you don't have to separate retail and investment banking, but what you do have to do is throw this ring fence around the retail bank so that if the whole thing crashes, essentially the Bank of England and the Treasury can just kind of let the investment bank fail, because who cares if all the bond traders and the rich investment bankers lose money, but we're going to protect the small savers, which, the Brown government have been unable to do with the Royal Bank of Scotland, because the Royal Bank of Scotland both had a retail arm but also a big investment bank arm, and had to bail out the whole thing. So the idea was that in future you wouldn't have to do that. You'd be able to sort of save the bit that you want to save, i.e. those kind of small savers and the bit that's kind of critical to the domestic economy. So that was the kind of concept behind the ring fence. And, it took a long time to implement and kind of get right, because it's pretty complicated stuff. And there is now a debate about whether it's too tight, that it basically has made UK banking quite uncompetitive, and they can't use, essentially, if I go and put some money in the bank, they can't use that money to go and invest in something overseas and do something a bit exotic with it. And unlike American banks, who've basically found ways around some of the rules that were imposed at the time, and by the way, the Trump administration is loosening those rules as we speak. So, personally, I don't feel like, although I'm the author of the policy, I don't feel sort of particularly strongly that you can't change the ring fence, you can't make quite major changes to it. But I still think you need to kind of keep the ability of a future chancellor who would find themselves in the situation that Alistair Darling found himself in. You've got to give that person some options, that they don't have to bail out the entire, they're not told by everyone, if you don't rescue this entire bank, spend, billions and billions of pounds of taxpayers' money and save all their operations overseas and save their bond trading floor and their whatever internal hedge fund. If you don't do that, the whole economy is going to crash. There are moments. I mean, I'll take something, not that long ago, within the last couple of years, Metro Bank almost failed in Britain. So these are not, and Silicon Valley Bank actually failed, which had a small branch in Britain. Now, in the case of Silicon Valley Bank, it was bought by HSBC in a rescue operation. And in fact, the authorities said to HSBC, you don't have to put it inside the ring fence, which is what enabled HSBC to do the rescue. And I think that shows sensible, pragmatic flexibility. But getting rid of anything that kind of gives future chancellors or bank governors or prime ministers the option to save the kind of key retail bit, I think might be a bit risky. And, it is worth noting, as you have done, that the current chief executive of Barclays, and Barclays Bank is the, alongside HSBC, the bank in Britain that has a big retail arm, but also a big investment arm. In fact, investment banking arm. In fact, it's such a bigger investment banking arm than HSBC in some senses, and big kind of Wall Street presence. The fact that the current CEO of Barclays is saying, I wouldn't get rid of the ring fence, I'd keep it, suggests to me that we shouldn't just scrap it. By all means, reform it, amend it, make it looser if you need to, make it more flexible, give the authorities more, ability to act with discretion. Yeah, fine. I'm absolutely myself not kind of committed to the model we introduced. And, the industry changes and financial services is always evolving. But get rid of it altogether, mistake.
I think it's actually really interesting, that Barclays point, because Bob Diamond, who was running Barclays, says get rid of it. But he's now involved in...
But he was a big investment banker.
And he's involved in different kind of banks now. He probably want to break into markets. Whereas the existing guy at Barclays thinks, we've made all the painful changes. We've moved our back office functions to separate the retail and the non-ring fenced stuff, very expensive. Actually, go back to that period, RBS was moving away from investment banking. Lloyd's never had much of an investment bank. It was always really about solving the Barclays problem. Why does Barclays want to keep with the status quo? I think the answer is because actually, and surprisingly, it's turned out to work substantially to the benefit of the big banks. What's happened is the big banks have become much more focused within the ring fence on delivering mortgages. They've kind of pulled away from expensive and difficult SME lending for the smallest businesses. But the big banks who would have been the challengers in that world, Santander, in particular, a bit of nationwide as well, Santander, they can't compete with Barclays and the big corporate lending those banks are doing because of the ring fencing rules. So actually, what it's led to is a greater concentration in UK banking. It's expensive for them, but actually they have more protection from the competition threat. And I think we always thought, and maybe you thought, the competition was going to come from the new smaller rival. But actually, the competition was always likely to come from the not quite big ones getting bigger. I think if you ask Santander why they haven't been able to essentially deliver a British banking operation to rival the others, it's because the ring fence has got in the way. It's kind of worked to the advantage of Barclays. That's kind of why they're happy to keep it.
Yeah, there's a kind of well-known concept of the regulatory moat, i.e. once you've built the kind of ditch around your castle, it helps your castle be protected and stops anyone else building a castle nearby. But the look, I just sort of end with this point about the banking crash. It created an enormous amount of anger in our country that bankers are kind of, quotes, got away with it. It's shaped our politics ever since because of what it did to our economy. One of the unforeseen consequences, given that, the initial problems were on Wall Street, is that if you go 15 years later, who are the absolute dominant players at the moment in investment banking?
Americans.
Big American banks.
Absolutely.
Goldman Sachs, Morgan Stanley, Bank of America.
That's right.
About 15 years ago, there were quite a lot of British and European rivals. There was Deutsche Bank, there was the Royal Bank of Scotland, there was Barclays Investment Bank, which is still a very strong player today. There were the French banks. But the truth is that with the exception of Barclays, exception of HSBC with its international banking operations and links to East Asia, the Americans are much more dominant than they were. And that's a kind of ironic consequence of, what you would at the time have said, banking crash started and begun in America. And I think it's certainly true that Britain and the European Union should think quite hard about what it can do. And at the moment, it looks like the EU is about to block some intra-country bank mergers that are being attempt to kind of create bigger European banks for nationalist reasons. The Germans are about to block it. And that is quite short-sighted if you want the European continent to have some big players. And if there are things we can do in Britain to help Barclays or help HSBC or others who want to build a big banking operation, yeah.
Look, if you're Rachel Reeves, you want growth, you want tax revenue. This is a sector you ought to want to flourish, and that is probably why they're looking at these rules. But the reality is, outside the European Union, for us to compete with the Americans, you'd have to have banks in the UK, which, relative to the UK economy, are huge. America has this massive kind of hinterland, and the individual countries in Europe make that much more politically difficult. You are right. Very interesting conversation. That's all for Political Currency. We'll be back on Monday for ex-ministers' questions.
Yeah, you can hear it early and ad-free if you are a Political Currency Gold subscriber, or, of course, if you're a member of our Kitchen Cabinet. And if you're a member of our Kitchen Cabinet, then you get access to tickets to our first live show at South by Southwest, and the organisers of that big festival are giving you tickets to the whole thing.
They are. Thursday the 5th of June. We'll be there. Tickets completely free for all Kitchen Cabinet members, and we will make sure if you get your questions in, we'll answer your questions at that event too.
And then you can use your full pass to visit the rest of the show. Apparently that is worth over £600. So you can find the link to subscribe in our show notes. We are offering you a bargain, and we hope to see you at South by Southwest.
In the meantime, enjoy EMTs, and we'll see you next week.